this is probably a situation everybody here on this call is familiar with. I think we know following the historic zero interest rate policy that started in March of 2020 and concluded in March of 22 following the wrap up of the COVID disruption, the Federal Reserve in March 20 began a literally historic, dramatic rate increase that has continued through this day. Flash forward to where we are today. I think we all know, is it 25 or 50? The Federal Reserve is going to be easing the federal interest rate probably at the upcoming meeting here mid-month. Well, I think we know, given this restrictive environment, and if you look back here in history, back in the period of 2019 and 2020, when the Fed has a tight environment, it does restrict activity and in turn creates literally a backlog of deal activity. Now with interest rates coming down, we're going to see a deluge of activity coming this way. And we expect there to be a lot of activity coming up here. And Steve, why do you think exit readiness is such an important conversation for companies right now?
I think the as a lot of CFOs probably know, right, the most common, I think, recruiter email that comes today is, hey, I've got a private equity backed or VC backed company. They're looking to exit 12 to 18 months. They need someone in the seat that can prepare them, right? So there's pent up inventory for sure. And I think the thing is that especially in an environment that is, not the heyday of 2020 and 2021, needing someone who can really strongly execute in that seat, because I think diligence is going to be deeper, valuations are going to be tougher. So degree of difficulty from an execution standpoint is certainly up from the zero interest rate environment that we were in before. And what that means is it falls on the shoulders of CFOs.
Yeah. Yep.
Especially for investor-backed companies, one of the things that we should know is that, a lot of private equity firms don't feel great about the CFOs that they have in the seat. So, a lot of times it's the old CFO profile. Maybe I was a CPA. I'm really focused on ticking and tying the numbers and focused in the day-to-day or table stakes of the business. And Scott Engler from PE Accelerate's done some great work on sourcing some information with private equity firms. And, everything from 85% of the CFOs and seats in investor-backed companies are not considered to be high performers. It went as far as some private equity firms saying that there's about 80% of the CFOs in the portfolio that they would replace if they could, but that's just not practical to replace that many. And one of the things that comes back to is being that strategic CFO and being ready for a transaction. So we talk about today is transaction readiness and, preparing for that.
Yeah, well, Steve, at what stage in a company's life cycle should the CFO begin preparing for an exit?
The real answer is you start day one. And if you haven't started yet, start today. And I think a really just super practical way to start, if you say well, I don't even know how to start, is build a data room for yourself. We can offer it as a follow-up if someone's looking for it, but you can Google it, what is a typical structure for a data room and the data requests you get, and start pulling that information together yourself and making sure that you have a copy. Because one of the most important things, and Tom, you and I have talked about this, is we're talking a lot about readiness and preparing, but you don't oftentimes get to decide the when. So if you get an unsolicited inbound interest, and it's the most logical acquirer at Flywheel, it was WP Engine, our largest competitor. We couldn't have come back and said, hey, we're actually not ready. Give us 60 days, right? That's not a great response. Instead, it's yes, we're ready to go right now. We have all of the data. We can turn over your request. So the answer is now, yesterday, 2 days ago. So get started.
Yeah, and to build on that, if you flip to the next page, Allison, I guess we had some research on this. Between half and 2/3 of all companies that are experiencing significant growth will experience an inbound offer. And again, as Steve and I chatted previously about this, begin with the end in mind. The majority of the companies at Consero are institutionally backed, growth equity, venture, private equity, and a sale transaction is not simply possible it's almost a certainty as well. And so really establish your Polaris, your North Star, with a specific date, certain endpoint, in which you're going to lead the business. I mean, a planned sale date, it could be 3 months or 3 years, but odds are you'll probably also experience an inbound offer. So advanced preparation is critical. And finally, no new work is being created. This is just setting the table and doing so on the timetable against you can execute on to be ready for this, whether you're taking the company to market 3 months or 3 years from now, or you wake up in the morning with an email in your inbox addressed to yourself and your CEO saying, we'd love to meet with you. We're interested. We'd like to talk about strategic opportunities, or whatever the context is. It's not if, but when.
And your CEO is going to look to you and say, you're ready, right? Right?
Yep.
Like, we're ready, right?
Yep. Well, Steve, looking at this here, financials, KPIs, how does the quality of earnings analysis fit into exit preparation, and how could it impact valuation?
Yeah, I think the biggest thing here is, the setup of the deal is important. So, if it's a strategic acquire and it's a competitive takeout, you probably have some additional factors that are gonna drive deal certainty. And the financials and the information shared in diligence is confirmatory, right? They just want to make sure they're not finding anything and there's not some big red flags. Whereas if you're selling to a financial sponsor, and it's, really, really tight on leverage and that needed to make the returns work, you're probably going to get more detailed as financial diligence, especially. So the biggest thing is that you want to present that your house is in order. So, audited financials, super important. Also, you understanding where the bodies are buried in your business. Oftentimes, I like to talk about kind of upfront of like, hey, when I joined the business, this is where we were. Here's the journey we've been on. If it weren't for this transaction, here's where we were going. Don't present as if everything is perfect and you're kind of at this ultimate end state. If you're a $25 million ARR business, no one's going to believe that. It's likely not true. So present reality. And then the other thing is with this list is you really just don't want to be in a position where you're creating these things for a transaction, because you're going to spend all of this time flurry putting them together. You're going to send them over to the other side, and then you're going to get a bunch of questions about it. And you won't have spent any time thinking about it because you were so focused on turning around the deliverable. So the goal is that these are things that you should be operating your business on and tracking regularly, and you're sharing. It's like, no, this isn't an exercise that I just had to create on my own for this deal that the CFO is doing at midnight to make sure that they can hit the deadline. This is our monthly operations pack that we put together. Let me walk you through it. This is something that I do every month so I can speak fluently about it. So again, it's like, it's the readiness piece, but also realizing that it should be core to how you're running the business already. And if you're not, you should introduce the concepts with that in mind.
So well said, Steve. And I hear time and again, especially clients who are coming to Consero, that something along the lines of, I don't have time for that. I've got to worry about today, not next week or next month, because they, by necessity, are so far down in the weeds cleaning things up. And that's frequently why Consero, we get inbound interest to help fix things, clean them up, and get them on the right path. Because at the end of the day, as you touched on previously, I think, the job of the CFO is really to be the steward of shareholder value and drive that ultimate outcome. Closing the closing package, the day to day. You need a team around you here, but that's focusing on what matters. So, all right. Consideration for enterprise valuation. Steve, how should a CFO assess and manage risk during the exit process?
Yeah, I think it's really important to understand all the dynamics at play of a transaction. So, if you joined perhaps a company after some money was raised or there was an investment round, is understanding, okay, what's that entry multiple? What are the terms? What are the terms of, if it's a growth equity or venture round, what are the terms of those raises. So you can really understand how existing investors are going to think about an inbound offer, right? Oftentimes, just a headline price isn't really enough to assess, oh, does this necessarily make sense to everyone? Do you understand the waterfall, the structure, distribution of how those proceeds are going to flow? And understanding if you have existing investors or owners, what their hurdle rates are, right? In growth
Yeah.
equity, you're kind of talking about a 3 to 4x over a 4 to 5 year time frame, right? That's kind of like the sweet spot. So if you're kind of under that, or really understanding, okay, yes, this is a 2x, or maybe it's a 2.5x, but it's only in 2 years, it's a high IRR. It's important to understand because it's going to drive the dynamics from a negotiation standpoint. It's going to drive going back and forth in diligence. The other thing too is thing I always talk about is that
Yeah.
if you're staying, Tom, like
Yep.
if you're staying, like let's say, at Bloomerang, JMI were our original investors. We did a partial recap in December with Warburg Pincus bringing a new investor on. And I wanted to continue on. I wanted to continue staying. So on one hand, you want to be super hard nosed on negotiation, diligence, but also balancing like, hey, I also need to be reasonable because if everything goes successfully, I'm going to continue working with these folks.
So well said. Yeah. Right on. Another element of exit readiness, and of course, is foundational to your revenue, your build, et cetera, your customers and your sales contracts. Have you segmented and analyzed your customer base from profitability and growth potential? I've seen companies actually had not done that, it was lumped together, and they actually had very bespoke and negotiated contract. They were losing money, substantial money with certain customers and contracts. They had not taken the time to act and think like a buyer would. Customer satisfaction. Are you measuring, reporting, and capturing customer sat? Your sales pipeline, renewal pipeline. These may seem obvious, but they're so foundational, and a number of companies simply are not. Looking a little further down the page, thinking about legal terms for your contracts. This is one example. I won't name the name of the company, but the CFO had come in, had been there for a year, and they were thinking about going to market and had not gone through and really looked at their sales contracts. And for a recurring revenue business, that really is the lifeblood, a lot of the core, the kernel evaluation of the business. Well, in so doing, one of the largest customers, a public corporation, and this deal had been signed years prior, about 3 to 4 years before the CFO got there, they had negotiated in a term for unlimited liability. Obviously, that had come out in the sale process. That would have been a huge hit to value, and just really know all that you're inheriting. There's a lot to see and a lot to know, but this is about preparing, and thinking, beginning with the end in mind. Churn. Are you capping your churn drivers? Other customers, champions, who will speak loudly, who will speak well about your company, who are the detractors, and what will they say? These are all things in the customers and sales contract area to think about here as you get your company ready to take it to market.
We talked about, Tom, a little bit before you joined, of just being extremely fluent in your business as the CFO and things that are completely out of scope traditionally of a finance professional. And this is a really good list. I think the other thing too is I've always gone with the approach of, if you're the expert on the business, you should proactively call out the things that are issues that are going to come up in diligence, and have a response ready, right? Of, hey, we know, for instance, that we should be charging and remitting sales tax in these 5 states. Given our scale, we haven't yet done it, but it's on our roadmap to execute, for instance. That's a common one, especially today, of kind of sub $30 million businesses not doing sales tax. It is better for you to lead with that, as opposed to, hey, we hired a firm to do a QOV and tax diligence. Did you know that you have potential liabilities in all of these states? All of a sudden, you're on the back foot. You're defending your position, as opposed to, we knew about it. obviously it's going to come up in diligence. Here's what we were going to do about it, and be in the driver's seat in these conversations.
And you know what? That lack of hygiene, that lack of care, that exposure, you and I both know that drives deeper and additional diligence. We have to check more and more things, slows the deal. It frankly hurts credibility substantially and puts the whole deal at risk.
Yeah.
All right. Well, Steve, other areas of prioritized focus, HR, legal advisory. How does a CFO manage attention between daily financial operations that we all experience and preparing the company for an exit?
Yeah, the reality here, and I think that just even being on this call and listening is kind of like a step in the right direction of being aware that this is important. But the reality is that there is an unfair burden placed on the CFO of investor-backed businesses in terms of, hey, of course I want the financials to be timely and accurate, and of course I want you to minimize risk, and of course I want you to be signing good contracts. But like, if you're just doing that, that's not super interesting to me, board member, me, Mr. Investor. So you just have to be deep in the business. And I think the thing is that the more that you can just make all of these things as part of your day to day, as opposed to specifically thinking about transaction readiness, the better. So whether or not HR rolls up to you or not, HR rolls up to me at Bloomerang, so I'm deeply in the weeds there. Does legal roll up to you or not? Are you working collaboratively with your outside counsel? One of the things that we did that was super helpful is when I joined Bloomerang, it was immediately after JMI had invested. We worked with our outside counsel on call it an issues list. And it was basically a to-do list for the next few years to just say, hey, none of these were deal stoppers in 2020, but as you scale and get more, more sophisticated, and we've grown 6x top line since then, is like these are going to be more important. So what did I do in that first year? I was like, hey, I want to make sure I get all of these knocked out so that in 2023, when I'm doing a recap with Warburg Pincus, that these things aren't going to be discussed. And those are boring things, right? Those were, hey, the privacy policy on your website probably needs to be refreshed. Your license and service agreements has some unfavorable terms. All of those things just come up to bite you if you punt on them. So getting an outside view, an assessment on where you are, and then start making your way through that list is going to pay dividends for you in the future.
Yep, so well said. And regardless whether HR reports to you, data security, operations, and as you and I both know, Steve, at the end of the day, you own the transaction. You have to lead the company, not perform a job, but lead the company through all of this, whether it's in your swim lane or not. It could be in sales comp. They all factor and roll up into valuation. And that, we touched on before, your job is the steward of shareholder value, protecting that and maximizing it. All right. Here's a loaded question. Do you have your response plan ready to activate? With some points there. Steve, what common mistakes have you seen the companies make during the exit preparation process? How can they be avoided?
I think a lot of people will say, oh, like I'm generally ready. Like, oh yeah, I'm ready. I run a pretty tight shop. I kind of understand what's going on. And I just think you're just not being honest with yourself a lot of times. It's more so of, hey, if I got hit. So, when I was a Consero client at Flywheel, we got an unsolicited inbound from WP Engine. We were heading into Memorial Day weekend. And on Friday night, it was like, hey, we're so excited. We're so excited. Here's our business due diligence list, legal due diligence list, accounting, and tax. We'd love for you to be able to turn it around as soon as possible. And so the question is, are you ready to that extent? Are you ready? Because oftentimes the CFO will say like, oh, I can just grind it out myself. And the reality is that if you haven't built your team up and have core people that you can count on, you're going to be set up for failure, right? There's only so many hours in the day. WP Engine's backed by Silver Lake, and Silver Lake owns Dell. So they would say things like, well, we acquired Dell in 45 days. So to acquire this flywheel business, this should take like 4 or 5 days, right? So,
Yes.
and I think we know, Tom, is that oftentimes it's the smaller deals that take longer and are much hairier because the businesses aren't ready. So I think really understanding readiness and just what are those things that people are going to ask for? What are the hot button topics? What are the things that I need to be prepared for? There's a great quote I told you about is the CMO of Pendo that said, in investor-backed businesses, your team is what determines your tenure, right?
Yeah.
CFOs,
Hmm.
finance people, we tend to think like, hey, we can be the hero. Oftentimes in budgeting, it's like, hey, we need the departments to cut to hit hit a profitability number, and the CFO will just be like, I just won't hire on my team, right? Like I'll take the cuts.
Uh-huh.
Like, no, like you need to have a team that you can count on, especially like, hey, I'm going into deal mode for the next 30 days. I need you, my controller, maybe my FP&A leader. I was like, you need to keep the trains on the tracks because I'm going to be able to dedicate 0 time to it. So having that team in place is super important.
That's so right. And sometimes you hear, and like you and I both have CFO colleagues, and they are every month are drawn deeply into their close process. And it is table stakes to have clean financials. I think we all know that here. But if that's the case, do you have, to your point there, and I'm going to steal your term, do you have the right team beneath you if they can't function without you? You should be looking at things on an exceptions basis because you have to focus on these issues here. You can't put them off. You may have a remediation period, but you really need to do this. And finally, as well, yeah, if you haven't, start having the conversation. I'll probably hit on that again here. But if you can do anything right now, like one piece of advice from this, get your CEO or your board members and have the conversation about exit readiness and begin with the end in mind. Uh, this is a great example here. We use this in a similar type presentation. This is our Consero scorecard. This really shows what a sample company might look like as they come to us and they say, hey, we need some help here. We want to outsource our FAS to you. And we would go through and we would give them a review or scorecard that looks just like this, that goes across all of these dimensions. I'll read them all off to you, but you can see on there as well, we've got, baseline F&A system, systems integrations, team structure and skill set, month-end close timing. And this is the diagnostic that we perform as we're assessing a company that wants to come on board here before we begin work. And if you flip to the next page, Allison, this is the after picture. And you can see here, all the reds have gone to green and there are 1 or 2 yellows on here. But this is the structured diagnostic we put forth to understand where a company needs help and prove to ourselves and to our prospective client that we can and will help them. And we'll spell these out, give them examples as well.
And Tom, if these are the things, for instance, let's say you're not in a position to remedy these things and you're in a transaction and you're spending time in diligence, whether it's with a strategic acquirer or financial sponsor, and these are the things you're talking about, like you've kind of already lost.
Yes.
Right? Like, if you're having a detailed conversation with your acquirer about your close process, because, there's some questions about how tight it is. Oh, hey, we saw, hey, we wanted a flash of August numbers. When are those going to be ready? And you say, oh, the 20th of September, right? Like that's where you're kind of already losing. So the thing is, it's not just about the numbers being right. It's not just about being accurate. Like you have to instill confidence in the acquirer, into your new investor, so that at the end of the day, the goal is that they're sitting there going through risk factors. They're going internally and they're saying like, here are the things that we want to nail in diligence. And you just want to get big old check marks, right? In finance, accounting, legal, right? If like, we feel really good about that. Let's focus on the market. Let's focus on the competitive landscape. Let's not spend any of our time talking about, hey, I think they're on like 3 different ERPs. And one of the things that they called out was like, they have a hard time. They only do consolidated financials quarterly. Do we need to wait until we've got the quarterly financials? It's just not the position you want to be. You want to be the sign of strength because no matter what, the CFO is often that tip of the spear. So you have to, one, show your house is in order first, and then two, you're representing the entire business in those conversations.
So well said. Yeah.
I think the biggest thing here is the role of a CFO in an investor-backed company is to get to an exit. So when you join a company that has raised money or you raise money, that your number one job is getting to an exit. A lot of times CFOs talk about, well, I've got a day job that's keeping me busy, right? I've got to make sure the financials are getting reported. I've got to make sure that we're doing budget to actual, strategic planning, all of these things. And the challenge is that exit readiness and ultimately selling the company is part of your day job. It's not something that you just do on top. So from the minute you begin at a company, you really need to start preparing yourself, and whether that's collecting information and really thinking about how you're going to present the business. The biggest thing here is that you have to make sure that you can get the table stakes, kind of the day-to-day operations, under really good control from the beginning so that you can focus on these things. So, in some prior experience, I joined a company and there was one person kind of overseeing all finance and accounting. They quit the day before I started. And obviously I pitched myself in the interview process as a strategic finance leader. And then the next thing you know, I was making sure payroll was getting run and vendors were getting paid. So that's when I got introduced to Consero back in 2018. And the goal was, hey, I really need to get finance and accounting up and running and smoothly so that I can focus on higher value creation work. So went with Consero. You presented the slide of kind of the three offerings. We went with the one on the far right, which was the full stack finance as a service. That was full implementation of a new tech stack, accounting processes, and really did that in less than 30 days. So we were up and running in 21 days and really allowed me to kind of shift to more strategic work. So, financials were ready. I joined in August. We were immediately into audit work in the beginning of the following year. Consero played a strategic role in that. They were the day-to-day go-between. And then really I could focus on transaction readiness and ultimately selling the company, which we did about a year and a half later. And all the financials were clean and ready to go because I kind of done that from day one with Consero.
Yeah, awesome. I appreciate you sharing that story. And we did have a couple of questions come in from the audience. So what are the most common mistakes you've seen CFOs make when preparing for an exit? If you're able to speak on that at all.
Yeah, absolutely. So I think one of the big things is that people don't start soon enough. So, if you haven't started yet, start now and focus your time on this. The other one is the role of the CFO is super unique, right? You're oftentimes going to be that primary go-between for a new investor or a strategic acquirer. So you have to be extremely fluent in your own data. So a couple of issues I've seen is, you're going to get pounded with a bunch of due diligence lists. You're going to get data request lists. And oftentimes you can get so focused on just turning around that data that you just pull the reports and send it over. And that's a really big mistake. You don't want to just send the data. You want to answer the question, that the reason why the acquirer is asking for the data. So if someone's asking for, hey, give me your customer cube, give me your ARR by customer by month for the last 3 years with product detail, any firmographic detail on the customer. Don't just send a raw data file over. I go so far to produce the outputs that you expect the strategic acquirer to put together, whether it's retention, segmentation, unit economics, and start to tell the story yourself about what they're ultimately wanting to do. You want to be in the driver's seat when as you're sending this information over. The other thing is you want to be able to add confidence throughout the process. So every micro level interaction that you're having with a buyer is an opportunity for you to get them more comfortable with acquiring your business. So it may just be a silly thing like, oh, I sent the wrong file, or, oh, sorry, this one's not formatted right. Like, take the extra time, because all of those little interactions are going to accrue and snowball through that process so that you can really be seen as someone who's running a really tight operation and really doing, gaining that level of confidence. The other thing is you have to be fluent in all areas of the business. You're going to get a question when it's just you and the CEO, and they're going to ask you a sales and marketing question. And it's a really bad position to be in if every time you get a question, you're saying, actually, let me go check with my team on that. So you really need to be that, that flex player that can go from talking about what product and engineering are doing, talk about what sales and marketing are doing, and answering the question through the investor lens, right? What or the strategic acquirer, why are they asking the question? And it's your role as the CFO to know why they're answering the question and then respond appropriately. You should be the subject matter expert on your business as the CFO. The CEO oftentimes is going to get them excited about the future, paint like a really great vision. And the CFO should be the one that's in the weeds, the nitty-gritty, knows how the sausage is made, and is able to answer questions with a lot of confidence to those acquirers. The biggest compliment I always say that you can get through any type of process is someone saying, how do you know that? How do you, as the CFO, know the answer to that question? So oftentimes CFOs can get stuck putting their head down, do their day-to-day work. They're sitting in Excel spreadsheets all day. Get out and get in the business. If you're remote, it's a little bit harder. You need to be a little bit more intentional. But if you're in an office, walk the floor, talk to sales reps, talk to engineers, and understand the pulse of your business. And it's all going to pay off in a transaction.
Yeah, great. Yeah, great answer.
It's a really good question. So at my last company, Flywheel, we used Consero as the FAS service. And I would say that one of the key reasons I think that it went so well for us and why I've been a big proponent of Consero over the years is we treated the Consero team as if they were our team. Like we didn't treat them as an outsourced resource. You had the VP of finance, kind of that connection point, someone who's based in the US, and then the team over in India. And we would just work directly with that team. We'd have a Monday morning team stand-up with the team that was all based in Omaha, Nebraska, and we would invite the Consero team to that. When folks from Consero were going over to India to visit the team, we'd be like, hey, can you send them some Flywheel swag with you? And we sent t-shirts. And I think we were ultimately really rewarded in that, because when I called our key person at Consero, AT, and said, hey, AT, I've got an inbound offer. I've got this huge diligence list. He pulled an all-nighter to answer the accounting questions. So I think when people ask me like, well, what was your experience like? And I said, well, not only did they do a great job, but they probably did things that most CFOs would have a hard time getting their full-time staff to do. So the more I think you can ingrain them into the business, like every Monday, I would talk to them about what's going on in the business. Hey, you may have noticed this when we were going through the close process. Sales had a bad month, sales had a good month, churns up, churns down, and just treating them entirely as if they were a part of the team. And I think that's what really set us up for success when it came to an exit. They had a vested interest, right? We weren't just some nameless organization sitting in Omaha, Nebraska, being like, hey, send me the send me the financials, right? They were part of the team.
Yeah, and another point here about Consero being involved in a transaction. And about a year ago, a CFO colleague of mine was mid-transaction and his controller gave notice in the midst of that as well. That doesn't happen with Consero, obviously, because you're hiring a network and a team and a corporation, not people as well. It's certainly a safer way to enter in and to see through that, because Consero can and does scale up during a transaction for our clients. So final takeaways, and to really hit on the points here right now, this is really about leadership and clarifying and understanding your mandate as a CFO, and beginning with the end in mind, because your charge is not to oversee financials. Those are table stakes. It's not to hire the right people, not about oversee systems. It's about optimizing and maximizing, and Steve and I talked about this at length beforehand, maximizing valuation. You're accountable to your shareholders, to your board, and your CEO, and that is your charge. The other pieces are important, but it's really about leading the company in preparation for and seeing a transaction through.
And I think the one thing that's probably, people are sitting here listening, it's like, oh man, that seems like a lot, right? There's a lot of things for you to be responsible for. I think one of the things though is that it pays off. It really pays off, and that transaction is smooth. I mentioned Scott Engler before. He kind of uses this phrase of, you get through a successful transaction and you really shine, you're minted as a CFO, right? People associate people with winners. If they've got a positive interaction, you've been through something, oh, you were part of that transaction, that went really well, that's going to pay dividends for you and your career throughout the years. And I think that it's just another reason why all of this is worth it. It's worth putting in the additional time. It's worth going the extra mile to learn the ins and outs of your business and not come it through the mindset of that's not my job, because the reality is when you're an investor-backed business, it is your job as the CFO. If you question or not something is your job or not, the answer is probably is, especially when it comes time for a transaction.
Yep. So well said.
Great. Thank you everyone for joining us. And we did get a question that came in. Tom, if you want to take this one, and Steve, feel free to add your 2 cents as well. How do you ensure the executive team knows the data inside and out and can answer questions that are aligned with the model you have presented to buyers?
I think it's a matter of, you really need to educate and make all of your other executives part of the solution, the issue. You need to lead them, walk them through. Here's what's involved. Here's how to be valued, and here's your contribution to that. It's really about comprehensive, ownership and stewardship of the business and understanding their role. And again, if you take nothing from this webinar today, but have the conversation, start with your CEO and bring in your executive team, because you're all going to be partners here in seeing through a successful exit.